Did you know that, according to Gary Black, a typical buyback could help Tesla make up to $18.9 billion in actual cash and earn up to $100 billion in free income over the following 3 years? This suggests that the car firm can make more investments to produce more incredible technological products and eventually become the most valuable corporation in the world. You won't want to overlook this information, for sure. Hi everyone, happy return. After multiple instances of Tesla financial backers publicly urging Musk to buy back Tesla shares, the Tesla stock community is optimistic that a buyback will occur soon, all things considered. Given that Tesla stock is now trading at a discount to the company's true worth, the repurchase is occurring sooner than expected. The manufacturer may find that now is the best time to buy back its stock. What potential effects may a share repurchase have on Tesla? And why would the automaker benefit so much from this? Let's see. If you're a Tesla fan, watch the remainder of this video to learn how the company is impacted by the reported share repurchase and the important catalyst that will lead Tesla share buybacks to occur even sooner than expected. But before we get started, don't forget to subscribe, like, and enable notifications so you can keep up with everything Tesla. The third largest private financial backer of Tesla, Indonesian security financier Leo Kogwin, has previously stated that a buyback or a twofold dividend hike would be sufficient to alleviate the pressure on Tesla's price-to-earnings ratio. Several Tesla bulls, including Leo Kogwin, think that the company's stock is now cheap. He said that Tesla can purchase shares of FSD's cheap stock and invest in the company's robotics and plants. Musk's reaction, in which he said he had taken notice of Kogwin's proposal, stoked rumors that Tesla may initiate its first share buyback. As a result, it is anticipated that the electric vehicle manufacturer will use some of its substantial cash reserved to generate returns for investors. A stock buyback occurs when a company uses its collected funds to buy back its shares from the market. Alternatively, it's known as a share repurchase. By absorbing the repurchased shares, a stock buyback enables an organization to reinvest in itself by lowering the quantity of outstanding shares on the market. Repurchases help investors by lowering the total number of outstanding shares and raising the amount of ownership owned by each financial backer instead of diluting investor value. The company is concentrating it in the event of a buyback. Stock buybacks are advantageous to organizations because they can substitute dividends, stabilize stock prices, and consolidate ownership. Financial backers can also profit because they get their money back. During the Q3 earnings call, Elon Musk, the president of Tesla, revealed plans to repurchase Tesla stock. According to Musk, the board of Tesla has discussed the buyback in great detail, and management believes that a buyback makes sense in general. Musk said that in order to carry out a repurchase, Tesla must choose the appropriate cycles, but it is definitely feasible for the company to do it for between $5 and $10 billion. Musk discussed a number of topics at the company's Q3 2020 earnings call, including the possibility of a Tesla stock buyback. He clarified that even in the worst-case scenario for the following year, Tesla might really carry out a buyback of between $5 and $10 billion. Leo Kogwin predicts that Tesla will have a huge market capitalization by 2030, and that it would be able to repurchase around $1 trillion between 2026 and 2030. In a tweet, Kogwin stated that he had recommended that Tesla repurchase about $100 billion worth of shares between 2022 and 2026, followed by another $1 trillion buyback between 2026 and 2030, according to the Tesla bull, who carefully explained the situation. If Tesla buys back its shares at a price of about $1,000 apiece between 2026 and 2030, it will remove 1 billion of the 3.14 billion shares that are currently accessible, bringing the total number of outstanding shares down to about 2.14 billion. The stock price may rise from about $3.00 to about $5,000 per share, since there will be fewer shares available for financial supporters. Similar to Leo Kogwin, a number of other Tesla investors, including co-founders Gary Black and Dan Ives of Future Fund, which has Tesla as its largest position, also believe that a share repurchase would be a fantastic opportunity for the company. Gary Black even suggested a roughly $10 billion share purchase in an open letter to the Tesla board. He claims that Tesla is currently in a position of exceptional financial strength with over $18.9 billion in marketable securities, cash, and virtually no debt, although somewhat less than anticipated. Tesla's production and delivery numbers for the 9 months ending September 30th, 2022, are still much higher than those of its rivals. In the same vein, expanding its capacity globally seems to be on track to meet robust product demand through 2023. The car company is still in a solid position to retain high numbers in the future, even though its stock price is currently cheap. In a different tweet, Leo Kogan said that Tesla's free cash flow was about $2.2 billion in the first quarter of this year, and that, after capital expenditures are taken into account, he anticipates that amount to increase to about $8.5 billion before the year ends and $17 billion by 2023 in the face of continuous supply disruptions. Tesla's production and delivery so far this year show excellent execution of capacity expansion to assist satisfy the high demand for its goods. The carmaker is on track to meet its usual annual net goal after delivering 365,000 vehicles in the second quarter of last year, bringing its year-to-date total to almost 930,000 vehicles, up nearly 50% year-over-year. Demand for Tesla is rising, and the company is making strategic efforts to meet these orders as well. All Model 3 and Model Y vehicle deliveries have recently been shortened by the automaker to at least a few weeks' delay. Long wait times have been a major problem for those who want to purchase Tesla cars, but if there are less delays, demand for the EVs might increase significantly. In a different tweet, Kogan suggested that Tesla repurchase its cheap stock and invest in new manufacturing facilities, FSD technology, and its Optimus robots. According to YouTuber and Tesla financial backer Dave Lee, if the company is able to generate higher earnings from its humanoid robot and full self-driving technologies, it may actually achieve this milestone. It is anticipated that the Tesla bot will expand the company's goals to include improving sustainable energy by lowering the cost of electric vehicles and facilitating the accessibility and affordability of AI-powered automation. According to Dave Lee, Tesla can currently afford to devote 80% to 90% of its resources to a share buyback because it does not have significant expenses that need to be prioritized. According to Lee, Tesla may raise more than $1 trillion from its FSD software if it is successfully implemented and generates an operational profit of between $20 and $25,000. However, that is only if it sells around 10 million cars a year, or about $250 billion for 4 to 5 years. The primary driver for Tesla's impending share buyback is that, as of January 1, 2023, companies that issue public securities and are listed on a U.S. stock exchange are liable to a 1% share buyback tax. The Tax Cuts and Jobs Act, which President Trump signed into law in 2017, includes this new regulation. In addition to encouraging businesses to invest in their employees or organizations, rather than repurchasing shares, this regulation seeks to increase income from investors who have benefited from the Act's increased corporate tax cuts. According to the U.S. Treasury, the proposed rule is expected to generate around $19 billion over a 10-year period. Some financial experts are worried that the 1% tax could result in lower long-term stock prices because of a decline in demand for shares, even though it is anticipated that those affected by this regulation will be able to benefit from a number of options, such as higher dividends, debt financing, and retained earnings for share buybacks. Others are concerned that since private ventures frequently lack access to alternative financing sources, this decision may put a strain on them. In any case, the U.S. Treasury anticipates that the new law will push companies to prioritize investments like R&D, infrastructure upgrades, and pay increases over share buybacks. However, companies like Tesla still have time to benefit from share repurchases before the tax takes effect, because it doesn't apply until January 1st of the following year. Additionally, stock investors should be aware of this impending regulation and keep an eye out for any shifts in the number of shares that companies are repurchasing. This will guarantee that financial backers are not negatively impacted by the new tax and assist them in making better informed investment selections. In general, companies and their investors should be mindful of the 1% tax on share buybacks, since it may affect share prices on January 1st of the following year.